So Nelson.
Word up.
What's up?
Peace up, A-Town. Boom, 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 mm-mm, mhm, 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 mhm.
I'm curious, is this live on Facebook with the singing
No,
again?
not yet. Will be.
Oh, you got an actual mic.
I've had a mic for a while. It's just, it sucks ass sometimes. Let me see if this works real quick. Okay. How do I sound in comparison right now to earlier?
Whoa.
Is that worse? Is that better?
Worse one. Worse.
It's a lot worse. Damn.
It has like that echo, like you're in the bathroom or something.
Oh, okay. What if I talk directly into the mic? Is it a little bit better if I'm like up here? No, not at all. Still echoes. Okay.
No, it's better. There's less echo.
So when I talk from farther away, there's more of an echo, and then when I go right up, it's better.
Danny, you pick.
Yeah. How do I sound on the microphone, Danny?
Sounds better. I like it.
Sounds better. Okay.
Yeah.
No preference.
Preference. All right.
I'm not even using anything. I'm just other than my computer.
Yeah. Make me a believer. Hey Ari, I see you're in the room. How you doing? Thanks for getting us set up with LoanBase here. If you're talking, you're muted, so I can't tell if you're saying anything right now.
I don't see him on. He was.
He was.
Yeah, he was.
We sold out.
I'm trying to figure out how many staff members can I fit in my room. And so now I open this air mattress up. I have no idea how to undo it. I found this in the storage.
Yeah, if you open up the hatch, it's gonna take like a few days for that to.
For real? Oh,
I don't actually
testing.
Like usually they have like a pinch to release it faster, but you still have to hold it there for like 30 minutes.
But yeah, I was gonna house at least 3 staff members.
Yeah.
And then
how you doing, Danny? Yeah. How you doing, Danny? Any updates on any purchases? Where you at?
Yeah.
I know
we're doing. I'm still in the middle of Tennessee.
Gotcha. You guys are still going through that slogger of Airbnb.
Yeah, it was supposed to close Monday, but then it got pushed to next Wednesday. So but then the issue is George and Kenny are flying out on the 15th, which is Tuesday, and I'm signing documents on the 16th, and I'm like, oh man, so they're gonna be stuck there for a good day and a half, maybe.
Oh wow, yeah, it's a bummer, dude.
Yeah, it was like, I was like, dude, you gotta close soon.
Yeah,
I don't know. You talked to Anthony.
I don't believe so, but
yeah, I met him on Sarah as well.
Mm-hmm.
He bought one too, and he closed today.
Mm-hmm.
So we've been in contact, and basically Kenny and George is gonna crash at his pad, his gotcha. Airbnb. Yeah, but his Airbnb is unfurnished.
Got it. So there's plenty of floor space then for them to.
Yeah.
See, that's how we hustle, right? All the stair members go buy
Yeah.
all these houses, but actually have no beds or anything to sleep in. You can have like 20 units, but you're still sleeping on the floors.
Yeah, air mattresses are only like $30 from Amazon. I mean, from Walmart if they're really that desperate. So, personally, I'm used to sleeping on the floor, so that's fine by me. Yeah, my buddy Kashav, though, he wants us to start buying into Georgia. So we put an offer on a duplex that his agent found, and so we have like we have under contract, and now I'm in charge of building our LLCs because I sat through so many of these meetups that now I know how to structure corporations properly to avoid getting sued and minimizing our tax burden. I'm like, damn, this doing this once a month has really benefited me. Yeah,
You're stealing business from the Anderson advisors.
yeah, I'm stealing business from Anderson advisors. Yeah. But yeah, my buddy Kesh, he's got like 15 units out in Atlanta. And so it's been kind of nice since he spearheaded everything. He's really like, I have a deal. We have it under contract. Do you want in? And I'm like, wow, I don't have to do work. You're going to manage everything. All I have to do is set up these LLCs and then just sit back. All right, I'm in, So those are my favorite types of deals where I don't even have to look things up. Yeah, so I might be expanding a little more in Atlanta with them since they have that. They've already got their system set up there, and I don't have to build a brand new team. I just kind of leverage him. So
Nice. Just one duplex though?
yeah, it's just one duplex right now, but
A flip, right? Or burr?
It might be a burr. I don't know. I should probably do more due diligence. I trust Kashav, but like I haven't looked that much at the property or how he got it. I'm just like, give me the inspection report, and my value add is there. Like I was like, this could be a issue with the foundation or whatever, and that's yeah. But yeah. So yeah, I've been having a weird cough for like over a week now, so it's also not been great. Yeah, sorry we're droning on. Ari, we kind of do this. We kind of catch up with members, and we usually start like 3 to 4 minutes after 7 because that's when most people
Everyone
get
starts
that.
rolling in.
Yeah, when their alarm happens. So.
But Ari, if you want to test out your equipment, your screen share, this is the perfect timing.
Yeah, now's the perfect time.
Yeah, I think it worked just fine.
Perfect. Yeah, Brian, you look new in here. How are you? Where are you from?
New. Johnson looks new.
Johnson, you look new. Tell us where you're from. We're gonna.
I'm just a tech guy. I see that you have a background in data science. I'm a guy from San Francisco working as an engineer, but just trying to get into real estate. Just got my realtor's license.
Nice.
And yeah.
Nice. I mean, I was in mechanical design at the tech companies originally before I transitioned to data stuff, but now I do data science in tech for a real estate company. So I'm like,
so did you start your own company? I've seen something like you have your own company.
We did. We raised capital from investors for commercial projects. So that's kind of like a different thing than my company that I work for. Do you know who Brookfield Asset Management is?
No, they sound familiar though.
Yeah. They're like I think they're the biggest publicly traded real estate stock company at the moment. So they have a lot of data for me to like use to build a competitor against them, essentially. So it's always.
Well, you don't want them to hear that, but yeah, that's awesome.
It's yeah. I like the company. It's interesting, and I am their first data scientist ever. So like it makes it fun because I get to build a lot of new tools that I would otherwise never encounter. I'm also
are you the first real data science title? I assume that they would have lots of analysts doing their analyzing.
Yeah.
Yeah.
They have analysts. They had a statistician before me. It was like a PhD that they fired before they brought a data scientist person in who like can program. So
Okay.
like, and then after that, yeah, I've been kind of building out their systems. I'm also kidding when I say like I'm actually a competitor. It's like they're buying up entire like cities at a time. I'm here like, yeah, we got another 80 units under contract. You know, like, it's nowhere near what they're doing.
Makes sense. Yeah.
Yeah. All right. Johnson, don't hide. We saw it. We called you. You have to. Come on. Let us know about you. Did he?
Nelson scared him off.
I scared him off. Damn. I would make
Tracy
a.
looks new, so welcome, Tracy. Are you the famous Tracy that's been helping us look for the venues?
Hey, Annie. Yeah, I mean, it's no problem. It's my pleasure.
Super. Thanks for your help. Really appreciate it.
Yeah.
Of course. Thanks for putting it together. I'm super excited.
Yeah. We love all the new volunteers that have stepped up to the plate. It's been a lot for people who have full-time jobs trying to like pull off a convention and then these webinars and trying to be useful. And, yeah.
If my boss asks, I'm still at work right now. Okay.
Oh, man. Annie's the worst employee. I would never hire her. Look at her stealing time from the clock.
It's so true. You should never ever hire me for a job, but I would make the best business partner.
Yeah. Annie's the business ideas. All right.
I know I came up with all of this within 3 weeks, and you guys are like just pushing me to do these random ideas. You just keep saying yes to my random ideas. So.
I mean, yeah, why not? So. Okay. So 3, let's give it a minute or two. Emily Lee, you look new in the group. Hello, introduce yourself. Where are you from? What are you doing? Are you going to Sericon? Sold out 2021.
Can you guys hear me?
Oh, yes. Oh, Johnson, you finally joined in.
Oh yeah, sorry about that. I was having some audio difficulties. But yeah, I mean, I've been investing since 2010. First started in single-family homes in Phoenix. Did some flips out there. Had an Airbnb in Vegas, and then now have been looking at apartment buildings here in the Bay Area.
Nice.
That's my background.
Okay. Yeah. Hopefully we can help you out with that, especially since Ari here is a commercial lender. So, okay.
Yeah, commercial lending is my background as well. So I'm real interested in hearing what Ari has to say.
Gotcha. Okay. Well, on that subject, 7:05, we're ready to go. I don't know if, do you want to give the intro, Annie, or I know this is technically you're fine, but
do it,
I can also.
You do it, Nelson. Yeah.
Always
You're
gotta,
the famous one with the pink fanny pack, so you got the power.
Always got to be the
mic.
face. Always got to be the face. Okay. Well, let me get this started then. Thanks everyone for showing up today. Here we have Ari. I don't want to butcher your last name, but he's with this company called LoanBase, and they focus mostly on commercial loans. So he can get you funded for anything from multifamily, retail, office, industrial, general use, et cetera, commercial properties. But he's currently the CEO. They've bootstrapped a company that they sold for 65 block living to 65 million assets under management in about 28 months. There's also an owner-operated real estate investment firm that's focused on acquiring, developing, remodeling, and managing multifamily in San Fran and LA. Currently, their average IRR is 42%. Huge, right? And he was previously the CEO of a company called Wiser, which was acquired, which had 85 employees. Notable clients included eBay, Walmart, AT&T, Home Depot, leading brands and retailers. He was also previously co-founder at Zent.com and Stanford GSB Ignite program graduate, including a contributor to many tech publications like VentureBeat, Forbes, and Retail Wire. But he's here to talk about LoanBase. They offer a new online commercial lending platform that connects buyers to hundreds of possible commercial brokers. So without further ado, I just want to give an intro to, I think I gave an intro to Ari, but if you could tell us about how you got started in real estate and essentially what you're doing right now with LoanBase.
Yeah, thanks for the introduction, and thanks Annie for putting this together. So really appreciate that. So on a high level, I'm a tech entrepreneur turned to a real estate guy, turned back to a tech entrepreneur. Sometimes the itch is, it's just too strong, and you have to go back to do tech. But I always told myself that with real estate investing, it just makes so much more sense, and it's a business with longevity. So as a tech guy, and I can see a lot of the participants are definitely like software engineers and working professionals and so on. It makes so much sense, right? You are creating your passive kind of passive income vehicle, and that's very appealing. With that said, so the gist of the gist of LoanBase was essentially when we got to a financing event. And when you get to your financing event, it might be a refinance, it might be a bridge loan, an acquisition loan, and so on. You have to do a lot of manual stuff and a lot of kind of labor intensive and cumbersome. And I thought to myself at that time, I was on the phone with a broker, and and I just couldn't wrap my head around like, oh, I'm gonna pay $100,000. That was the loan of almost $10 million. I can pay $100,000 to get an introduction, and that didn't make a lot of sense, and it didn't add a lot of value. So I thought, well, why there shouldn't be kind of a website, a platform out there that will be kind of a Google Flights or a Kayak for commercial loans. And that's essentially what we built. So I hope it makes sense and gives some context, but that's kind of the background story. It's built by real estate developers, for real estate developers and investors. Yeah, so that's pretty much it.
Okay, that's really interesting. So then I guess on that, how did you, I guess, scale up on this sort of thing? Like, how did you do this first project where you're like, hey, I have a platform or like commercial lending, and then you grew it into, I guess, this company now?
Yeah, we started kind of with approach of dog feeding, of kind of of using our own solution. I wish I had LoanBase when I started, because I was calling all these banks and lenders and had to compare and had to educate myself, and it was just, imagine yourself when you want to fly from SFO to let's say JFK or even international flight, and then you're going to call Delta, and you're going to call American Airlines and Alaskan Airlines and I don't know, maybe KLM, and ask about each single flight, and ask if it's an overnight, if they have seafood business, if they have like meals and so on, if there is a layover or and it just doesn't make sense. You go to Google Flights and then you just compare, or you go to Skyscanner or Kayak. And this is just a no-brainer in this industry, but when it comes to real estate lending, it's just like you have to start making calls to every single airline. And that's kind of the inefficiency that we came to fix. And we really want to democratize the access. So it's about making the transaction simple So it's not really for those who has the relationship and has been there for many, many years.
Could you actually
So
explain
that's-
on that too? So then how would you compare to say the average loan broker, usually for commercial? It sounds like you're doing some similar work, but do you close faster? Do you close bigger deals? What I guess is your unique competitor advantage?
Yeah, so I can share some, obviously some information. I'll try to but the gist of LoanBase is really as a platform to get to a level that's it's almost a self-serve platform, so therefore it's more cost beneficial. And when you do something like that, then it's obviously it's cheaper than a broker, but also faster. A broker will call, let's say, 4 banks, and we have 450 lenders in the database. So think about an API, like, you know, database that you just slice and dice the data. Nelson, Nelson might be a developer that is kind of more aggressive, right? And wants a more proceeds, like we'll go all the way to 80% LTV on a refi. But Annie's might be more conservative, and she's okay with 65. But she will opt into a better rate. You know, Mark can be a developer that really wants a non-recourse. That's a non-starter. So it's really not one size fits all. And that's why it's really important to take this kind of Amazon-esque approach where you compare and fit the right solution for your needs. So yeah, so that's pretty much the approach with LoanBase. As mentioned, I hope you see my screen, but as mentioned, this is, you know, so it's definitely a large industry and there's a lot of pain into that. And if you can cut the costs of origination, if you can make a transaction that is way faster and transparent, and you can close fast, then that makes a lot of sense. And this manual process of sending rent roll and T12 and personal financial statements, so on. Imagine everything is kind of connected to your bank account, to your property management software, so to your through Plaid, through connected through Cozy or Appfolio or Yardi, each one with their own. Then it saves you so much time, because every time you're going to go and get a loan, it's already there. It's kind of a repository that the lender gets a loan package, and I'll show you later on with the demo. But this is essentially kind of a, you know, platform where we try to help the borrowers and the real estate sponsors or the real estate investors, whether they're beginners or whether they're like more savvy, to really guide them through the process and from the get-go until the loan is funded. And really the goal is save time, save the cost. Real time transparency is a big thing because it's something that doesn't really exist. Sometimes you call a broker and they're gonna get you the deal that is really best for them because they get, let's say, a yield spread if they get you to a certain bank, but they don't get a yield spread from another bank. So that's kind of a super important thing.
So I have a question on this too, actually. I know
Yeah.
for some commercial loans, I've been told when we apply, for example, for an agency loan, if you get your information pinged by too many of these commercial lenders, you end up, I guess, risking. You end up not being able to like really. It looks bad for future loans. I was told when you do commercial and you're doing agency, really, you kind of just go with one. Is that something where I'm off on? Because pinging the Fannie Mae Freddie Mac system is not great, apparently.
Yeah, when you essentially go to like agency loans, right? So these loans it's a cookie cutter. Like when you go to one of the agencies, it's really a broker will not add a lot of value rather than putting a loan package for you. So they work with the same criteria, they work with the same guidelines if you look at two agencies, you know, I think there are like 12, maybe around 12, maybe less agencies that have a DUS license, and it's pretty much the same. I mean, there's no way that one agency, one lender will give you a way better deal than another. It's really about, it boils down to the ability to execute and close fast, and how good is the team to underwrite your deal. But sometimes, you know, like now the rates are the banks, the local banks, community banks, their rates are starting to kind of, I guess in some of them start to drop. Their LTV goes up a little bit. So it really depends. I mean, the agency loans are more attractive it was more attractive during the last, I guess, 12 months, because that was the best in terms of proceeds for multifamily. But yeah, but again, it's if when you take a data-driven approach, you can really compare, and it's case by case. You may have one deal that you want to take a local bank, and another deal that you want to take a national bank, another deal you want to take a debt fund that you didn't even know of.
Could you actually go deeper on that point? You were saying agency loans are actually like the Fannie Freddie Mae ones. They're not as good as some of these local banks are giving out now. Is that what you were saying? Like,
so with regard, are you asking whether the agency loans sometimes are more expensive or cheaper than local banks?
Yeah, it sounds like you're saying banks are loosening their standards and their fees when it comes to their loans now compared to agency.
Yeah, I mean, some banks were like, I'll give you an example, like Sterling Bank. Okay, it's a local bank at in the Bay Area. Okay, so they used to do 55% LTV when COVID hit. Now it's kind of more relaxed. They go back to the 60, 65. So this is just one example when essentially, oh, sorry, I'm screen sharing it, trying to. Yeah, it's really about comparing the data in real time. I'll show you later kind of when throughout, not the kind of the screen share recording, I'll show you the platform. But when you are comparing in real time, it really depends, and you really see the difference. And sometimes the agencies, right now, the agencies drop their interest reserve requirements. So there was a 6 months or 9 months interest reserve. For me as a developer, it was a big deal. And I think it's important, but you know, that's why it's really vital to compare apples to apples.
It was like 6 to 12 months, depending on the type of project and your experience. So
yeah, so you know, that's a big deal. That's a big deal, and sometimes origination fee makes a difference, and so on. So you really want to compare it in a visual way. I mean, today, if I'm gonna go to LoanBase, let me show your, I guess the website is open to the public, but today, if I'm gonna go to LoanBase, I can, the platform is gonna ask me for my address, my investment property address. So let's say I'm gonna put a random address.
So question 2, have you looked at and seen other competitors? In our group, we know Certain Lending is there pretty often, and they have a similar sort of product offering. Do you have a killer feature that you think is like a standout when it comes to LoanBase?
Yeah, to be honest, we haven't seen anything in the competitive landscape. LoanBase is the first to take a marketplace approach. So we're not a direct lender yet. We do have a program started for bridge and construction, but essentially, when you're using a marketplace, you're being connected to multiple lenders, and it's really about making the process seamless. So I think we really, I mean, from the feedback we got, we really nailed down the UX, and you can see like this is actually a current version, and we're rolling out a newer version, but it's within 4 minutes I can select the property, whether it's multifamily, maybe it's residential, even if I do portfolio. I can be retail, office, industrial, and so on. So I'm going to choose the type of property. I'm going to choose whether it's a purchase, refinance, bridge, rehab, or construction, date of closing. So I'm going to choose a few basic details. Let's say my outstanding loan amount, I don't know, let's say I have $750. When do I want to close? What's the loan term? And I'm going to put some basic details. We're actually going to pull some of these details in via API very soon. Just it's coming up on our roadmap. Then I'm going to choose recourse or non-recourse. Again, it really depends. If you're willing to do a recourse, you will get more lenders and slightly better rates. So it's really not one size fits all. So let's say the property value is $2.5 million, and you want to get you can set your leverage. And LoanBase will then slice and dice the data and will give you your indicative quotes.
So
based on that. Yeah.
While we're waiting for this to load, could you actually follow up a bit on what you said earlier? You said you have some features in the works. So besides the API, is the API directly feeding, what information is it feeding into, I guess, your website?
So the information that is feeding is essentially the rates, the programs. If it's 24 months, that's a short-term bridge loan. 5 years, 7-year, 10-year, 30-year fixed. Then LTV or LTC. Also LTV. I think it's LTV ARV. So essentially LTARV. So loan to after repair value. This is for people who do fix and flip. Recourse, non-recourse, interest only or non-interest only. Days, time to close. Also prepay penalty or prepay penalty policy. So some lenders have a yield maintenance. These are super important things. Like you might have a great loan, but then it's very strict. For instance, agency loans, right? You're on the hook. I took a loan from an agency and I'm on the hook for 10 years because I have a 10-year yield maintenance. That means that if I want to sell, it's it's pretty hefty fine. It's like 9% of the loan amount. So again, depends on your strategy. I mean, if you want to keep your building for the next foreseeable future, the next 5, let's say 10 years, then that agency is a good fit. But if you're not sure, then it's a very it will be a strict prepay penalty, which will be like.
So how many banking lending partners do you have? And I guess on top of that, of those, I guess banking partners, which states are you allowed to operate in with LoanBase?
Yeah, so we have about 450 lenders in the database. We operate nationwide. We also have a few programs that are in-house, so we can close as fast as 14 days. So we do work with funds, secondary funds that really gives us the mandate. So we do a balance sheet lending on their behalf. So that even makes things faster and streamlined. Yeah, so currently we operate in we did loans in California and Texas, Alabama. We did in Tennessee, a few in Florida, Nevada, and a couple more states that.
Let me just take this then from the top. I am a new investor. I've maybe purchased a handful of single-family homes in the past as rentals, but now I'm looking at an 8-unit apartment complex. I go through your process, right? I click all the information. Do I need to have the property ready already? Is there a way I can qualify for anything, or do I have to wait until I purchase the property, then I put in the information, and then I can get my rate quotes? And how long does it take to get those quotes back?
Yeah, so you start with getting indicative quotes, which is what you see here, right? So if you have, let's say, if you want, for instance, 75% LTV and like, so we're going to have a short list of banks and lenders essentially that can do that deal. Then you're going to click on add property, and essentially we're going to start the process. But we can, for users that need a pre-qual letter, we can do that, because essentially what we do is, and I'll show you soon, but we have them edit some of the details of their financial info, and then we can give them a pre-qualification letter, so they can go and purchase with that. And once they're in contract, then we start the process. For borrowers that don't need a pre-qual letter, and they essentially, when they're in contract, then they're gonna start a process with LoanBase. And at that point, I mean, it takes 4 minutes to do that, this kind of wizard. And then usually they get indicative quotes immediately. And then within 48 hours, they'll get an LOI once they selected the lenders they want to work with. As long as they fill out the info, that takes another, I would say, 5 minutes. That's pretty much it. So it's really shrinking the process from like 4 months to 48 hours.
Do you know what sort of rates you're seeing for like agency versus bridge versus I guess hard money even? I'm looking at a building right now in Chicago that we have under contract. It's 80 units, but half of them are empty. You know, half the units are empty. So I guess that would be hard money. And so how would I guess, pull, well, like what sort of terms are you seeing at the moment?
So for bridge, we are seeing terms that are between 65% to 85%, sometimes 90% LTC, loan to cost. That means you get the proceeds for the purchase, plus you get the proceeds for the remodeling if you need, whether it's light remodeling or really heavy value add. We've done that. The fastest time we close the deal is 14 days, but we're really getting better and better. And when you have when you have a repository with data and just it sits in one place, so we don't have to wait for email back and forth. And the rates we're seeing is between 7.5 to, I would say, 9. That's on the bridge loan. And again, in the grand scheme of things, it's not a game changer, because if you do 6 months or 12 months hold or even 24 months hold, it's not a big, like, this is the short period where you really optimize everything, optimize your pro forma, get ready to the big refi, and then that's like 10-year, 50 or 30-year refi. So really you try to optimize your pro forma and lift your NOI in order to do a successful refi, and we're putting you in position to do that successful refi. And we're gonna also go to that then, whether it's agency. So we're seeing as low as like 3% on refinances. It depends. Obviously, if you have high liquidity and you're willing to do kind of a relationship account, then that's something that will get you to the bottom tree. If you're not willing to put $500,000 with certain banks, I like to call it, some banks, they lend you your own money, so
right.
You have a deposit relationship, but so it's kind of double-edged sword, but so it really depends on but that's what we're seeing. We're seeing that.
I also saw you had a residential loans division. So I know, for example, on I think it was better.com or Betterment, they will match. Yeah, they will match loans for residential properties if you can show them another rate. Is that something you do at LoanBase as well, or?
Yeah, so we do not compete in a niche of primary residence. That's where Rocket Mortgage and Better and so on, that's their niche. We really focus on investment properties, commercial properties. So that's where we focus, because like you can do some small balance loan and so on, like up to 10 properties you could do with some of the agencies. But when you start being a professional investor and above a certain amount, then you really want a loan that is not based on your W-2, that that is kind of a no docs loan, so it's a bank that will underwrite the performer in the business and will not underwrite you. Of course, for the first things that you can do a HELOC, you can do other things. We kind of the next step, the next stage where you really expand to investment property per se.
Got it. That makes sense. Okay. So then on that subject, I think this is the part where we try to open up the conversation to more questions from the group. If you guys have anything else, I know Peter commented, so I'm going to follow up with that. But if you guys have anything else, make sure to drop it in the chat. Unless you want to show us a little more of the presentation, Ari?
No, I mean, there's, I would actually like to show you the platform.
Okay, yeah.
It's more
Let's do
relevant.
that then.
We can, yeah. Do you want to start with that or start with questions?
Let's do the demo.
Yeah. So let's
turn off the live part in the recording then.
Sure. Let me also log in. Okay. So I've added a property, and as you can see, this is a property that I've just added. So all the details that I've just added, they're here in my property summary. And this is essentially, see that if I go to my LoanBase dashboard, I see all of my portfolio, right? So I see my portfolio, I see my tasks, but essentially I also have a tasks tab, but which is divided by property. So for every property, like, so yeah. You're on mute.
Is there any dish on Y Combinator that you might have pushed you away? Is it because they take too much of an equity cut, or what's the?
I mean, well, it's, yeah, it is expensive in terms of equity dilution, but look, at the end of the day, if you optimize your success rate, then it's just, if you optimize your chances of success in startup at this stage, you want to optimize your success rate. So sure, it doesn't matter if you dilute 7% for, and then you multiply your chance of success by, 2, 3, 4, 10x. I like, just for me, we were fortunate enough to know enough, I guess, and like, just, it really depends. If this is your first company, then, and you really don't have a good network, YC is gonna bump you up like, 10 levels because it's a huge network. At the end of the day, it's like they were really good at creating FOMO. And it's kind of, usually you're chasing VCs and funds, but with YC, they're really good, especially, well, now it's different with remote demo days, but I know from friends that are partners that like VC partners, they told me like YC are really good at creating this competitive process where the VC is chasing the deal and not the other way around. So kudos to them.
Got it.
But yeah, so that's very much about it.
And then I guess we're going to be wrapping this up soon. But does anyone have last following up questions? And then maybe I mean, I'm personally interested in the product now. Do you happen to have somebody who's used y'all in the past that you can give as a referral? I can ask how they felt about the process, since we are under contract for something that we might actually use you for.
Yeah, absolutely. I mean, we would love to. I've just shared actually, let me send to everyone. I'll send a code that this will be live actually tomorrow, so you can all use this invitation code to get access to LoanBase. If you have any upcoming financing or any kind of acquisition, it can be acquisition, can be bridge, can be refinance. So you can definitely use that code to get access to the system, which is still invitation only. And we will have one of our account managers, so either me, Tammy, or Brendan will work with you, and we'll be glad to help out with any financing needs. Yeah. And obviously we would love to get feedback on a product. That's that's why that's the stage where we are.
Okay. Well, yeah, thank you again. Again, everyone, that code is SARE 2021. If you guys are ever going to commercial lending and want a little bit of that discount, go for it. Aside from that, thank you again for your time, Ari. That's it for this special Thursday webinar. Y'all got any closing statements, Annie, that you want to give us? You're muted, Annie.
Man, all the good stuff. That was right at the beginning. So just to recap for our events upcoming for the rest of June is that next Thursday, we're going to have a webinar on North Carolina. So if you guys are going to be going on our first ever SARE field trip at the end of the month, please go check that out. That would be a great pre-departure orientation for you guys. So, and also really congratulations to SARE that we sold out on SARECon 2021. So we sold out all of our tickets within 7 hours, and I know there's a lot of people on wait list. So hopefully we'll be able to get some open spots for you, and we'll keep you posted. But if you tried to get in and you couldn't, get yourself on wait list. So thank you everyone for tuning in tonight, and we'll see you guys next Thursday. Bye-bye.
See you guys. Bye.
All right, thank you.